Dima, we cannot hear you.
Okay. Hope you can hear me now. Thank you. Thank you. Sorry for the technical issue here. So, hi everybody. We're launching the 3x Capital's demo day, and I'm Dima. I'm general partner at 3x Capital here, and I'm really eager to showcase all the startups that we're gonna be showcasing today. So in the agenda, we're gonna have a few startups that we'll be presenting. First of all, we'll look at venture launch. That is a Q&A seed stage investment platform on Solana. That's something that we've been working on with 3x Capital and with other people during the Solana hackathon day. So we're not only investors, but we're also builders. So we know all the pains and gains, of course. We're also gonna have creators, incredible ready to earn movie recommendations platform. Then we'll have RentSpace Beach, that is a blockchain-based property rental platform. We will conclude with Chainify Labs, which helps onboarding traditional gamers to Web3. And as a separate part, we will discuss DeFi risks. We'll discuss the case study together with Steph, a person who joined our team recently as an analyst. He went through our educational program for Web3 analysts and DeFi, and he'll be proudly presenting his findings today, and then we'll wrap up. So this is the plan for today, and I also would like to announce that we're gonna have 10 amazing jury panelists. That will be Bruno from ICP Hub Indonesia. We're gonna have Roman, founder of Charged. We will have Alexei from Everstake. We're gonna have Sarunas from Founders Head, Jareen from Donus Capital, Adam from MV Global, Victor from Unicorn Factor Ventures, and Isaac from Code and State, and a few other angel investors who recently joined the pool. So I'm very excited about this opportunity. Thank you so much for joining. Feel free to share your thoughts or comments or questions in the comments. We will try to accommodate them after the comments or questions from the jury. Okay, so thank you so much for being with us. Now I'm inviting Taras to present venture launch. Taras, how are you?
Hi guys, happy to see everyone today in our meeting. Hope you enjoyed, and we'll see a lot of great startups. So let me share my screen, and I will be happy to present venture launch.
Okay, so we have venture launch presentation up, and we'll have 5 minutes for the presentation and then 5 minutes for the Q&A session. Jury members, you may prepare your questions and drop them in the chat. Okay, thank you so much. Taras, you can start.
Cool. My name is Taras Siworski. I'm CEO of Venture Launch, and today I am more than happy to present you our product. First of all, I would like to mention your attention that right now it's so easy to buy any stocks, real estate, or other type of assets through your mobile or in different markets. But what about seed investments? For retail users, it's quite complicated right now to invest small tickets into startups at the early stage. So we want to change it. And it's the reason why we are building a venture launch. So venture launch is a seed stage investment and fundraising platform. We saw a couple of problems with our team we are targeting. So from startup standpoint, first of all, it's quite complicated to raise funding on early stage. When you are just at the beginning and you don't have a traction, you don't have enough user base, so it's quite complicated to get this early funding. Second one, it's of course lack of guidance and support. And the last one is pool of investors. Of course, all of startups, they are targeting to get the funding from venture funds, from prominent angels, etc. But it's quite complicated to reach out to them and actually get funding from them. From another hand, retail investors, they cannot invest on pre-seed, seed stage, even with bigger ticket size. I'm not talking about the small tickets we are targeting. Another point, we saw that it's quite complicated to exit from the startup. So your liquidity is locked for years until startup will actually do token generation event. And the last one, of course, no enough time and skills to do a proper research before you do invest. So we want to build a venture launch with three main features. First one, of course, is to get this opportunity for retail investors to invest with a small ticket size. Another one, it's a milestone-based approach. Right now, I think it's quite complicated for users to track how startup is reaching out all their milestone and give them funding. So we want to solve this problem and give funding based on milestone achieved on the platform. I will show you just in a while how we want to build it. And the last one is liquid pre-market. So users will be able to sell their tokens before official listing or on our platform. Shortly about our team. So we have a Kirilo, who's our CTO. He's senior blockchain developer, and he's also lecturer at Kyiv Mohyla Academy. Ivan, who is chief investment officer, he invested in more than 52 startups, and he actually knows this pain about investment in prominent early stage startups at their first period of time. We also have a strong marketing team with Lena and Bogdan on board, Dima, who is chief legal officer, and also we have guys from Kyiv Mohyla Academy who is developing the product. So we have Alexander, Volodymyr, and Alexander who is building product together with us. So for benefits, for investors, as I mentioned, we want to bring this opportunity to invest in pre-seed, seed stage startups. We want to bring access to liquid pre-markets. And the last one, to give a really prominent understanding what is startup they want to invest. So this guidance and opportunity for them to get informed decisions. For startups, I believe it's quite important to get this community that can help them to kickstart product adoption. And with our platforms, they will be able to do it. Of course, at the same time, to get option of funding at early stage and access to a diverse pool of investors. Our target audience, so we want to target pre-seed and seed rounds. We want to target retail investors and also other industry professionals who can also use our platform. I want to show you our demo. First of all, it will show you investor profile, so how he can log into the platform, see startup, take informed decision, and invest amount he wants to commit to the startup. Another one, it's milestone approach we want to implement in our platform. You can see a business analyst profile who can take a look into milestone he achieved, and after that approve it or disapprove. And the startup will get funding after it. So basically, we already implemented our MVP in place, and right now we more than ready to develop our product to the next stage. That's it from my side. Hope you enjoy my presentation, and I'm more than happy to answer your questions. Also, feel free to follow up our Twitter account and take a look on our latest updates later on.
Thank you so much, Teres. So, perfect timing. Now we have 5 minutes for the Q&A session. The first question is about competitors. Can you tell a little bit more who are your competitors and why Venture Launch is better?
Yeah, of course. So today in the morning, I also checked one competitor, who's Angel Blog. I believe what we want to target, first of all, it's early stage startups. Right now, you can mainly invest on a public stage or private stage. It's better. So we want to bring opportunity to invest on early stage that doesn't exist right now on the market. Another one point we want to bring it's milestone based approach. So we will give funding to the startup based on milestones they will achieve. And the last one, as I mentioned, it's opportunity for liquid per market. So we are thinking to implement it through NFTs. So the user will get NFT and they can trade it on our platform before official listing.
Got it. Thank you. And I have a question from Alexei from Aristake. What is the go-to-market strategy, mainly the strategy behind attracting quality projects to list them on the platform?
Yeah, so right now we want to get our first 1,000 users. Right now we already have more than 200 followers on Twitter account. And after that, we want to start a couple of campaigns with KOLs or also in a month or so. And after it, we will be ready to do fundraising for a first startup. So we are right now feel quite comfortable in terms of startups. We want to give or help to fundraise through our platform. And on the other hand, we are working into our marketing campaign to get first 1,000 users registered. Dima, we don't hear you.
Yeah, thank you for this answer. What about the next question is from Victor from Unicorn Factory Ventures. How will the company be registered and regulated? How will each deal be structured for non-accredited retail investors?
Yeah, so we plan to work at the beginning just with tokens, not with equity. So we plan to work through Estonian legal structure, but we still are working on it to get the best option for retail users, how they can invest into that startups through our platform.
Yes, so the legal structure is still being discussed. If you have good lawyers in the proper jurisdictions, Victor, you're happy to connect with Taras and discuss it. Okay, now the question from Bruno. I've expected this question. Why Solana has been chosen as a chain for building this platform? What are the advantages that it brings to your application? What considerations have been compared to other chains?
Yeah, so we started with Solana because we actually saw a Coliseum hackathon, and we thought that it's good opportunity for us to check the idea and check what feedback we can get. But actually, right now we are thinking what other chains we can use, and I believe we will not stick to one chain.
Yes. Okay. Good point. Thank you so much, Taras, for sharing. And we're out of time. So thank you so much for presenting Venture Launch. Dear jury members, feel free to go to the grading sheet and leave your other comments or any suggestions that you may have for the Venture Launch. Okay, thank you so much, Taras. And I will now invite Oleg from Creators to showcase us what they have built. during the last period and their beautiful ready-to-earn movie recommendation platform.
Hi, everybody.
Oleg, please go ahead.
Okay. Hi all, my name is Oleg. I'm CEO and co-founder of Raters. Raters is a blockchain recommendation platform that brings together a community of movie lovers and filmmakers. I bet you agree that finding a movie to watch is a difficult and time-consuming task. People spend a lot of time and effort trying to find a movie to watch. Meanwhile, filmmakers and studios struggle to reach their relevant audience online due to limitation of existing channels, resulting in significant opportunity costs. To solve those problems for both users and filmmakers, we decide to create Raters. Our patented machine learning algorithm allow us to recommend movies to our users better than our competitors, leveraging similarity of movie tastes between different users. Raters is available on iOS, Android, and web platform, and we have over 250,000 registered users. For filmmakers, Raters allows to launch movie campaigns targeted only at the most relevant users based on their preferences. Better targeting leads to better conversion to movie retails and purchases, and enhance higher revenue and optimize advertising costs. Based on our current campaign with our London-based clients, we are 4 times more efficient than Facebook in the niche of movie promotion. Having a build a sustainable off-chain platform, we have recently started to expanding into the Web3 sphere by integrated blockchain technology and issuing our own tokens. Rate tokens will help us to attract users even quicker, as they will be rewarded for their activities and will be able to spend tokens onto human-to-human recommendations and other enhanced app functionality. Moreover, token holders will receive DAO voting rights over certain aspects of Raters platform in exchange for staking rate tokens, of course. We have also started expanding our ecosystem into DeFi Launchpad, where filmmakers will attract funding for their production, for the production of their films and series, and our token investors will have an opportunity to invest in them earlier and on a better terms. Move on. Okay, market is huge, and it will be growing rapidly. It will be growing rapidly on the next decade. The problem and solution that I described earlier is also related with all digital type of digital content: films, video games, music, books, and even mobile apps. Of course, on such a large market, competition is also huge. There are many different platforms proposing their own movie recommendation solution on the market. Expanding into blockchain and DeFi Launchpad will help us to stand out from our competitors. We have already generated revenue from 4 channels, monetization channels, and expansion into Web3 will further enhance our financial performance through DeFi Launchpad fees and also NFT sales commissions. Our go-to-market strategy focused on organic channels, as they drive a sustainable long-term growth of users, which make us more appealing to large film studios and video game developers. We have a great team of professionals covering all vital areas of our company: technology, business development, marketing, and sale. For areas where we didn't not develop sufficient capabilities yet, we rely on the experience of our partners and advisors. We have show a significant track record over early years of our company, raised 500K in funding, attract a community of 250,000 users, and receive patent for our machine learning algorithm in the US. Web3 expansion, including create tokens, NFTs, and DeFi Launchpad, opens exciting opportunities for us, as well as a perspective to expand video games segment in the next year. We are currently raising $200K to reach community of 2 million monthly active users, integrate blockchain into our platform, develop Launchpad, and start the first campaign with our first clients, TMM and Kidsify. Thank you for your attention. If you have questions, I will be great to answer on them.
Thank you so much, Oleg. This is something very interesting. And the first question you already mentioned, and you have quite a significant traction, which is quite rare for these early stage startups. So this is very impressive. Can you tell more about your first clients? Who are these companies? And why did you choose them?
Thanks for the questions. Yeah, for the question, our first client is a London-based production studio, which promote their film locally in UK market. It was I will try to remember this film. Takt. The name of film is Takt. We promote their film and get 4 times better results from depend on Facebook similar campaign.
Got it. Okay, I have another question coming from Isaac from Code and State. And Isaac would like to know, are the 250K registered users already within the Web3 niche? How are you validated your hypothesis attracting Web3 users?
No, currently we have just Web2 users. They registered through social networks or through email. But currently we are working on integrated user authorization technologies based on ICP network chain, ICP chain, and we hope that we will integrate this technology during the next months, and will attract new users from Web3 sphere.
Okay, thank you. Next question is from Sarunas from Founders Heads. How can you verify and manage the quality of the ratings if people are incentivized to leave ratings for money?
Okay, it's a good question. Thanks. We think about it. Of course, this opportunity will be. We will try to recognize this issue with the cost of rating not will be a lot, not will be a big. That's why we think that people don't have reasons to cheat our system. So we will integrate few types of technical and human control methods. I think I hope I answer the question. I can tell more because there are a few steps which we will do, and some of them are really technical solutions, and I can explain your more details. Sorry.
Sure. I see that Isaac is typing another question, probably a reply to you. But in the meantime, I'll ask a question from Bruno. Which blockchain are you using or you're planning to integrate? And what is your strategy to reduce the cost of user acquisition? So
Okay.
two questions.
First questions about blockchain. Currently, as I mentioned earlier, we are working with ICP blockchain. We are integrated I don't remember how it technology called. We integrate user certification based on ICP blockchain technology. It will be first step. The next step, we think about multi-chain technologies, but ICP will be first. Second question, how we will reduce cost of acquisition. We focused on organic channels, CEO and App Store optimization. It's currently working now, and they drive long-term user acquisition, and they work permanently. So it's our main growth hack for user acquisition increase.
Thank you, Oleg. And the last question from Isaac: what's the secret sauce of your rating mechanism, and why wouldn't larger competitor be able to copy it?
Yeah, good questions. Thank you. Our ML machine learning algorithm work with 74,000 parameters and try to match all these parameters between preferences of two different users. So we truly understand what kind of movies like one person, and we can match his tastes with different user. How we stand on competitors, we have already patented our ML algorithm. So this is unique algorithm, and we get patent on this technology.
Okay, thank you so much, Oleg.
Thank you for the questions.
Thank you for your questions, dear panelists, dear judges. Please feel free to leave your comments or thoughts in the document. It will be very valuable for the founders. And now I would love to move to the next pitch, which is RentSpace. It is a blockchain-based property rental platform, and we have Ivan on stage sharing his deck.
Yeah, thank you, Dima.
Okay, Ivan, the floor is yours.
Do you hear me well?
Sure, sounds good.
Just give me a second. Despite quite intensive workout during the past couple of days, I'm super pumped to present you RentSpace today. Just give me a second, I will share the screen. Do you see it now?
Yeah,
perfect.
All good.
Perfect.
Let's go.
Greetings, ladies and gentlemen. My name is Ivan Maltsev, and I'm a founder of the RentSpace. RentSpace is a crypto-friendly property rental platform powered by Internet Computer and also supported by Solana Foundation. During the past year, we have conducted dozens of interviews, reviewed a lot of research, and we identified that the majority of the classic property rental platforms, they have problems with innovation. So there is a big gap in the immersive video marketing that millennials and Z generation prefer. For instance, probably you know that Instagram stories are used by more than 500 million users every day. And we do not have a property rental platform that allows you to see this cool format. Also, we understood that demand for collaborative booking is growing. So around 30% compared to the past year. Also, as a crypto users ourselves, we understand that it is difficult and time-consuming to pay with cryptocurrency. So every time when I want to travel, I need to pay taxes, pay conversion fees, and then I can use a fiat to pay for the trip. Our solution is quite unique. The main feature is a TikTok-style video marketing. So our hosts can upload the videos to our mobile application. The videos will be compressed and stored on blockchain. And then our guests can enjoy this wonderful interface on their mobile devices. Also, we will have crypto and fiat payments, group collaborative booking feature that will allow you to travel with your friends, with your family, and split the payment, paying in different currencies, either fiat or crypto, and also action-based rewards programs that we are integrating right now with the point system. The property rental market is huge. The total addressable market based on statistics is around $475 billion with compound annual growth rate around 7.7%. Our serviceable, obtainable market is only $271 million, but it's fully enough for us to be a profitable company. Regarding our revenue model, we are integrating the largest booking aggregators in the world called RateHawk and Booking.com that will allow us to generate 7% of the revenue from every trip that will be done through our mobile application. Also, we are doing NFT sales in order to have revenue and grow our community. And also, we will have additional revenue stream in the form of NFT royalty. Speaking about the team, I'm a CEO, a visionary of the company. I have more than 8 years of experience working as a portfolio manager in the crypto space. I'm a partner at 3x Capital. Also, I have an amazing founders, Vlad, who is my friend and entrepreneur with more than 7 years of marketing experience. He also holds a PhD and leads our operations at RentSpace. Also, Vinayak is our CTO. He's experienced developer in Web3 with more than 6 years of experience. He is also a head of developer relationships in ICP Hub India. We have an amazing advisor, Bruno, who is a co-founder of Disruptive's ICP Hub Indonesia, who introduced us to Definitive Foundation, and we received a significant support from them. We also have a chief creative officer, Lina, who is creating a lot of marketing content for our community, and the partnership manager, Marta, who is building relationships with partners and ambassadors. Also, we have 3 developers, designers who are creating the mobile application. Unfortunately, I cannot show them all here. So speaking about the roadmap, we built a prototype in Q1 2023. We invited a technical lead to join the team in Q3 previous year. We applied to Definitive Foundation for a developers grant. We received it in September previous year. And this year we passed through 3x acceleration program, received also support from Solana Foundation, participated in Coliseum Hackathon. And right now we are very close to launch our mobile application, just working on the last milestone of our developers grants. For the future, we plan to focus on the global marketing and expansion, launch also a desktop version of our platform, and do a seed and private rounds in the end of the year. Here you can see the product demo, where you can connect with the Phantom wallet or another wallet on ICP. You can even join with internet identity. You can select the apartment that you like, and you can pay with crypto or fiat in the application. So it's super easy and comfortable to use your crypto right now and travel. Join us, and you can follow us on Twitter, RentSpace Co. We are growing really fast, even before the product launch, or you can reach out to me in Telegram if you have any questions. And actually, I'm looking forward to the questions from judges. Thank you.
Thank you so much, Ivan. I have the first question from Sarunas from the Founders Head. Can you explain what is the problem that is being solved by the blockchain in your startup?
Yeah, actually, there are not so many problems that we are trying to solve with the blockchain technology. The one of them is smart contracts that will be used to do this collaborative booking feature. Also, we are storing the data, the personal data, the videos, using the very efficient cloud of ICP. So actually, we are leveraging blockchain technology to improve our product and solving the main pains of our clients that we understood with the lack of innovation and crypto payments.
All right, thank you, Ivan. Next question from Isaac. Let's say you grow fast enough to get attention of larger platform like Airbnb. If they respond by adopting short-form videos and accepting crypto payments, how would you still be positioned to win in the market?
Yeah, that's a great question. Actually, it's really hard to answer this question, but we already know that Brian Chesky, he did the voting on his Twitter, and people provided more than 4,000 proposals to integrate crypto into Airbnb. So it was number one actually proposal from the community to have these crypto payments. And I think that Airbnb is right now a very big company that can change really slow, and that's the main problem. So we have some time to take a part of the market, but we already have one big competitor called Travala that generates a lot of revenue. I think around 4 million in previous months and around 3 million in February this year. So we know that it can work.
Okay, thank you so much, Ivan. And the last question from Bruno from ICP Hub. How can people join the platform and list their real estate? Will you have also a referral program?
Yeah, actually, we can allow our hosts to upload videos and list their properties right now in our application. But the main bookings will be provided through the largest aggregators. So we will be able to focus on the crypto users. Of course, there will be a referral program, and Bruno, I personally will reach out to you when everything is ready, and we will invite your friends to participate and become our hosts.
Okay, thank you so much, Ivan, for presenting and answering the questions. We will now move to the last pitch for today. Fortunately, we will skip Amsets. Michael from Amsets has he has a lot of grounds because his wife just recently delivered a baby, and he wasn't able to join for that personal reasons. But we wish him well, and we hope to see him in next event. So for now, I would like to invite Chainify Labs, who are onboarding traditional gamers to Web3, and with which we had a pleasure to work during the last few months during the acceleration program. Hi, folks. Hi, Matt. Hi, Hudson and Mark.
How's it going? Thank you for having us.
Okay.
All right.
Going good.
Cool. So,
all right.
Again, thank you so much for having us. We're Chainify Labs, and we are ushering in the next generation of gaming. So our product is here to solve the current problems in gaming, and there's two sides to that problem. There's the problems gamers face, and there's the problems gaming companies face. So on the gamer side, there's lack of derived value, so gamers can play for years and never see the real value from their efforts. And then the player's experience is reduced over time as more emphasis is put towards profitability for those gaming companies. Then players are often eventually feeling the pressure to spend more money in the games to progress further. And then on the other side, you have the opposite problem that the gaming companies are facing. You have keeping players satisfied, the struggles with that. You have issues with lack of recurring revenue, and then you have competition from third-party marketplaces as well. So what is Chainify? We're addressing these issues, and Chainify is significantly improving monetization for gaming companies while simultaneously enhancing player satisfaction. Our infrastructure enables gaming companies to leverage blockchain for fees and secondary item sales, creating alternate revenue streams, since blockchain gaming statistically yields significantly higher revenue per player than non-blockchain based gaming. This approach, although actually more profitable, is enhancing player satisfaction by avoiding the introduction of poorly conceived game content revolved primarily around profitability. So Chainify monetizes with the live game DeepSpace, proving out the tech we plan to offer to our customers firsthand. Our team's been tirelessly working on DeepSpace and the underlying tech for over 2.5 years. We've shown that it works, and now we want the opportunity to offer this to other companies to use. So what is our infrastructure solution? So again, gaming companies are leaving significant revenue on the table, neglecting that secondary sale tactic for in-game items. That oversight's not only hampering their profitability, but it's also depriving players the opportunity to derive value from those gaming efforts, which in some cases can span years. Instead, players are often resorting to selling items on external marketplaces, risking their assets, risking their accounts, potentially violating gaming company policies. So to solve this, Chainify is offering a bolt-on SDK that will provide a trustless platform to integrate blockchain with traditional gaming, transforming in-game assets into tradable blockchain tokens. This is empowering players with true ownership, enhancing engagement, and opens a new revenue stream for gaming companies through a commission-based approach on secondary marketplace transactions. This will also lead to an increase in the initial sales volume of these game items due to increase in player confidence and item resaleability, as well as diminishes external market competition, which therefore even more so boosts in-house recurring profitability. So we're pioneering a new era in gaming economics for an immersive and profitable experience for both players and companies. So what's the business model? Our gaming model leverages the already highly successful and proven freemium model that's relying on introducing players for free or very cheap, with a portion of those free players transitioning to paid players. Those paid players are then monetized indirectly based on fees from game content like item sales, marketplace rakes, and wagering. Games that have tokenized assets actually yield on average 300% the revenue per lifetime per player than games that do not, which is why we're utilizing it to enhance an already proven gaming model. So showcasing the tech here, the live MMO DeepSpace incorporates multiple exciting gameplay styles that appeal to a broad array of gamers and uses our tech. We feel it's important to show this tech in action as a proof of concept and feasibility. So these next two slides are just examples of how we can facilitate seamless transfer of gaming items to and from the blockchain for secure trading, selling, holding, or even moving them across different games. So this unique feeling given to the players not only empowers those players with that true asset ownership, but it's also enriching their gaming experience by integrating their assets potentially with broader digital economies. And then traction. So the DeepSpace game itself launched in beta in December 2023 and is trending up with already 5,000 registered users as we continue to deliver more in-game content to showcase Chainify's tech. So the next steps are to begin turning Chainify's tech for DeepSpace into that out-of-the-box SDK I mentioned to be usable for other games. So currently in 2024, the NFT gaming market is over $13 billion already. It's in its infancy, but you can see it has an extremely high annual expected growth rate of over 70% a year. So therefore, it's expected to grow to over $65 billion in 2027. Chainify expects to be able to capitalize on $150 million of this market right now in 2024 and over $750 million in 2027. We believe this is a conservative estimate, not even including Chainify's potential to onboard traditional games. So who is Chainify Labs? Who are we? So I personally, I'm an engineering manager. I'm shifting more towards focusing full-time on Chainify. The rest of the founding team is comprised of engineers, technical experts, and the likes who initially bonded over a mutual love of gaming, trading, and building tech. This common interest naturally led us to the realms of DeFi and crypto, where we recognized the potential of merging these areas to fill a gap in the market. We were seeing really poor gaming experiences, and we really wanted to fix this, being lifelong gamers ourselves. So to bolster our capabilities, we brought on several highly skilled devs so you can be confident in our capability to build out the Chainify SDK. If you're as excited about what we're building as we are, please reach out at team@chainifylabs.com to inquire about participating in our upcoming seed round or becoming a partner. Thank you very much.
Thank you so much for sharing, Matt. This is incredible that you've been building both infrastructure, but also the proof that this infrastructure can work with your game. And I have a question about the community. Can you tell a little bit more about the community of gamers that you have developed so far? Because adoption is the key here with the game that you have, right?
Yeah, absolutely. So again, we've been live for a little bit over 4 months at this point with the beta version of the game. So we have around 200 daily active users, and this is with a very bare bones game. So over the past 2.5 years, we've been very tech stack focused. So we've been very focused on creating the surrounding tech for the game. Now that that's done, we're really focusing on the in-game content and making sure the game is fun. So as we continue to make the game more fun, we really expect our daily active users to skyrocket. In terms of the community itself, with the token, our token DPS, as well as the holders of that token and the players of the game, we have a lot of developer AMAs that we do monthly. We take a lot of feedback from the community. We have a testing community as well that helps us quickly test builds and launch and stuff like that. But again, we've had people holding the token for about 2.5 years now, and now they're playing the game. They're starting to spread the word. They've been waiting for the game to launch for that 2 years or so, and now that it's live, we're really starting to see those numbers tick up.
Got it. Thank you, Matt. And I have the next question coming from Isaac from Golden State. What's your go-to-market strategy?
Yeah, so basically what we want to do is we want to increase our daily active users for Deep Space to really prove out that our tech will work for a game that people are actually playing. And once we do that, we plan on raising our seed round, and then we plan on building out, turning our tech from, our own tech to that out-of-the-box SDK, and then selling that, as well as charging a fee to actually introduce it to games in a non-intrusive way. And then we can start really focusing on selling the tech itself to traditional and blockchain gaming companies.
Mm-hmm. Okay, thank you for this. And I have another question from Bruno from ICP Hub Indonesia. Why is your game and your NFTs better than any other gaming already with these features? What is your unique selling point?
Yeah, that's a great question. So I think our unique selling point for our NFTs is that we're using our NFTs in a really tasteful way. So like you see a lot of these blockchain games, they're leveraging NFTs in ways that are kind of gimmicky, right? Like gamers that are just gamers that just want to play games, they don't care about NFTs. They don't really care about that tech. We're using the NFT technology in a really nice way where we only use it where necessary. It's not interrupting the gaming experience. For example, the way we've developed our NFTs and our ecosystem is that you can basically come in and start playing the game in 2 minutes. And while you're playing the game, you're not being interrupted by transaction approvals, anything like that. You can play the game as a normal game without even utilizing the NFTs if you don't want to as NFTs. But then the minute you say, hey, I want to move to the chain and maybe move my NFT somewhere else or sell it on the marketplace, you can do so, but you're not forced to do so in our ecosystem. Whereas in a lot of these other games that are using NFTs in really intrusive ways, you're forced to really interact with the blockchain and the NFTs. So that I think is the beauty of what we've developed here.
Let me jump in real quick with one additional thing I think that's important is our model is chain agnostic. So we're not tied to any one specific chain. And the way our infrastructure works, we don't, for those more technical on the call, we don't actually rely on any layer 2 solutions or anything. We allow you to bridge in and out of the game from main layer 1 chains like Ethereum, BNB, and whichever ones else we may support in the future. And so as a result, you have these people from different chains in the game together, playing together. And we're kind of taking out that layer 2 hop and making it not needed for our technology.
Yep, that's a great point that I actually forgot to mention. So when you look at onboarding companies, I won't name them, but they're using layer 2s. And what happens when you're using a layer 2 is you essentially have a siloed approach to gaming. So you may have users on one chain or layer that are playing in their own ecosystem or instance, and then you have gamers in another instance. Ours brings all the gamers from all chains and ecosystems into one gaming instance. So you have people that came from BNB, Ethereum, whatever other chain, no chain at all playing in the same ecosystem like a normal game, really. And then again, like you only have to utilize blockchain as a gamer in our ecosystem with our tech if you want. You're not forced to.
Thank you, Matt. And the last question from my side, you mentioned that one of your clients are game developers, right? So can you tell a little bit more, how can you help them earn more, and what are other benefits you might bring?
Yeah, so you mean like our potential customers, right? Like gaming companies?
Yes, exactly.
Yep. So basically the way I see it is that, gaming companies are selling items in their games, and that's basically their path to profitability, right? They introduce an item in game. A lot of the times, from my experience and a lot of other players' experiences, they'll release really powerful items to sell these items for money, and that's ruining that gaming experience. So by us creating, token-backed assets for their game assets, as well as a marketplace to facilitate transactions for their players, we're allowing players to trade between themselves, as well as allowing companies to take a cut of those transactions. So then they don't have to continue releasing monetizable content nonstop. That is really the true goal of how we plan on, making our customers more profitable, and based on data, 300% more profitable.
Yeah, and good point here from Isaac. It seems like the partnerships with big Web2 game developers will be crucial. How will you pull off getting these big labels as clients?
Yep, absolutely. That's another good question. So over the next year or so, we're going to prioritize going to gaming conventions, really highlighting how we are keeping the gaming experience true rather than muddling it with blockchain. Again, we're utilizing blockchain only as we need to provide benefit. We're not doing it as a gimmicky, solution or anything. It's just, it's really maintaining the gaming experience, and it's also allowing us to operate and build on top of what games already have. We're not really intrusively integrating into their databases or anything like that. We're just building on top of what they have. So it's an easy sell to gaming companies because we can directly increase their revenue without them having to change a lot of their infrastructure.
Yep. Okay. Thank you so much for sharing. Dear judges, feel free to leave your extra feedback. We're going to be appreciating this a lot. So this is it for now. Thanks, Matt, Hudson, Mark, for presenting. And with this, we are concluding this part of the demo day, but there is another very interesting part that awaits you. All of us are using a different DeFi protocol, and sometimes we're using them, daily, like so many of them daily, right? We use yield farming, money markets, we use stable coins, and we don't realize what kind of risks we have facing us. So we have our analyst Steph, who will be presenting us the analysis that he made on different DeFi risks, and hopefully how we can avoid those risks. I'm happy to say that Steph went through our educational program previous cohort, and if you would like to join the next one, you still have a chance. Go to 3xcapital.fund and go to education section, or just go directly to 3x Capital X Education XYZ. We also going to be launching a new cohort of Web3 startup analysts soon, so we can have more bright-minded people joining our team and other teams of VC and accelerators. So, Steph, the floor is yours.
Hi everyone, GM. Just making sure that you can hear me well.
Yes, all good.
All right. So hi again, everyone. It was very insightful to listen from the ideas and the solutions of the startups that we've heard, and also the questions coming from our panel. So right now, let's transition to the world of DeFi. And for the past few months, we were exposed to various opportunities in DeFi, varying from airdrops to new liquidity pools to farm and new tokens to stake. With all these opportunities around, it is a must for us DeFi users to also be familiar with the risk. So that's why for today, we will do an assessment of the different risks in DeFi. And just a short background about me before we start, I started in crypto as a trader in 2020. In 2021, I was fascinated with DeFi and NFTs and began to do some informal research works about them. And by the end of 2023, I left my full time job as an operations manager and went full time crypto. So, as mentioned by Dima, I started my Web3 career here at 3x Capital as a participant of 3x Education's Cohort 8 DeFi program. For this presentation, we will be discussing the risk classifications in DeFi, two of the DeFi verticals, which are yield farming and money markets. And last is the risk in stablecoins. To understand the risk in DeFi, it's critical to classify them into two classifications, which are the technical risk and the economic risk. Technical risks are those that arise from possible flaws and vulnerabilities in the protocol's technology. The two most common technical risks that we see are the smart contract exploits and oracle manipulation. Smart contract exploits happen when hackers are able to exploit the smart contracts through the loopholes. And oracle manipulations refers to the manipulation of data feeded by the oracles, which hackers can use for arbitrage opportunities, leading to unintended or even intended consequences. Economic risks, on the other hand, are risks from unforeseen consequences in the design of a DeFi protocol. So, an example is a governance vulnerability wherein there could be a poor governance proposal that might put the project into a bad spot. Next is arbitrage opportunities, where temporary price inefficiencies could have negative consequences for the users. Now that we know the risk classifications, let's move on to our first DeFi category, which is yield farming. To remind us of what yield farming is, yield farming refers to the depositing of assets in a liquidity pool to earn the swap fees of that pool or the governance token of the protocol. Currently, the yield farming vertical has a TVL of 9 billion. Classifying the risks of yield farming. So for the technical risk, we have here potential hacks and smart contract exploits. And for the economic risk, we have impermanent loss, and of course, crypto being a high volatile industry and the fluctuations in the rewards in the liquidity pools. For this discussion, I'd like to take on a more focused approach to the economic risk, which I believe is more avoidable and controllable by the regular DeFi users. So for yield farming, the most important risk to consider is impermanent loss. Again, impermanent loss it is a temporary decline in the value of your holdings compared to simply holding the asset. So, impermanent loss happens because most of the automated market makers implements this constant product formula, which is x times y is equal to k, where x and y represents the amount of each asset in the liquidity pool, and k is the amount of the liquidity. Let's also remember that impermanent loss would only become permanent loss if the LP providers closes the position. So how do we mitigate impermanent loss? I provided here two approaches. So under the basics, users can opt to stake to a single exposure pool, which is like staking, where you provide a single token and earn the rewards. Next is to avoid volatile and uncorrelated pairs. Uncorrelated pairs are your volatile assets paired with a stable token. So as an example of this is ETH USDC. And volatile pairs may include pairing a meme coin with a less volatile asset. So an example could be with Sol. Now for the advanced strategies, the first one I put here is active portfolio management. So I understand that not all DeFi users have the luxury of time of being able to actively manage and rebalance their portfolio. So I put it here. Second is by offsetting the impermanent loss with the fees. So the fee rewards of liquidity pools might be low compared to the impermanent loss incurred. So the solution is to find LPs that implements a concentrated liquidity pool model or a liquidity book model. So the CLP models are being implemented by Uniswap V3, Orca in Solana, and Camelot in Arbitrum. So through this LP model, liquidity is provided on a tighter range. So it enables users to have a more capital efficient and a more capital efficient strategy. So thus it increases the earned rewards through the LP. Users can also decide for a flexible liquidity pools like Balancer, where weighting within the liquidity pool can be customized rather than having the standard 50-50 weight ratio. Okay, so the next vertical is money markets or the borrowing and lending protocols. Borrowing and lending protocols currently have a TVL of 34 billion. So before we proceed with the risk in this vertical, here is a case study of Onyx protocol, which is a fork of Compound. So Compound is is a money market protocol in Ethereum and Arbitrum. So Onyx protocol had an empty pool attack in 2023, wherein the attackers of Onyx protocol exploited the new and unfunded pool of the meme coin called Pepe. So it was a wrapped version of Pepe, which is called O Pepe. So what the attackers did was they inflated the value of the token. They deposited it into the unfunded pool. They leveraged a rounding error in the protocol, which allowed them to redeem more than what was due. So it effectively drained the protocol's resources. So lessons we can learn from here are the importance of security audits, risks of fork applications, and the decentralization wherein Onyx protocol only had a low community participation involved who voted on introducing a wrap version of Pepe as a deposit. So if you want to know more about this case, you can check out the Hackens article on the Onyx protocol exploit below through the link. Okay, so moving on to the risk of borrowing and lending markets. For the technical risk, we still have the smart contract exploits and hacks. While for the economic risk, users have the risk of having their collateral being liquidated by several factors like unforeseen volatility, and fluctuating borrowing costs is also a risk, especially here in the bull run where borrowing costs are often high, about double digits. And for the and then for the protocol risks, there could be liquidation shortfalls where the protocol is unable to liquidate positions. So therefore, it produces bad debt. If this keeps on happening, the protocol could face insolvency risk. So how do we mitigate the risk in borrowing and lending markets? So mitigating risk in the money markets are pretty straightforward. For the basics, the simplest thing users can do is to choose the trusted platforms with the highest TVL. to minimize the probability of an insolvency issue. Next is to always monitor the health factor and always know the liquidation ratio or the price where the collateral would be liquidated for the where the collateral would be liquidated. And then for the advance, one thing that we could do is uh, users can one thing users can do to avoid sudden liquidations is to lend and borrow the same asset. So through this strategy, user can maximize his borrowings without putting the collateral into a higher probability of liquidation. And lastly is to understand the volatility of the assets to borrow. Uh, Having the knowledge of the extent or the probability of how low the price of an asset could fall could give a great advantage of not having their possessions being liquidated. And the last thing that I would like to discuss are stablecoins, where it is currently at a market cap of 154 billion. It is not a DeFi category, but to me, it is one of the most important assets utilized in DeFi, as it makes up several DeFi ecosystems. So there are three common type of stablecoins. So the first is fiat back. Fiat back are your USDC and USDT, which are backed by fiat and cash equivalents in their treasury. Next is your over collateralized stablecoins like DAI, which is backed by other cryptocurrencies and even RWAs, real world assets. Last is the algorithmic stablecoin, which leverages algorithm and incentives to maintain peg. And an example of this is UST. And a hybrid alternative is Frax, which both uses hybrid algorithmic and collateralized mechanisms. And for this one, of course, the best case study for stablecoins is the case of the Terra USD collapse, which has affected many DeFi users from the past cycle, myself included. So the USD collapse is characterized by its unsustainable mechanism of providing a 19.5% yield on the stake USD. And what happened was the failed arbitrage mechanism of minting one USD and burning of one Luna or vice versa tragically failed. And the UST stablecoin was also under collateralized, wherein the total market cap of UST reached as high as 18 billion, with the only backing coming from its arbitrage mechanics and the 1.6 billion BTC treasury fund by the Luna Foundation Guard. Discussing the risk of stablecoins as a whole, the technical risk involves, again, smart contract vulnerabilities and even Oracle manipulations. For its economic risk, on the other hand, it involves collateral risk, which is a concern over the assets that back the stablecoin. The pegging events triggered by the depegging event risk, which is triggered by high volatility situations, and algorithmic risk for algorithm-based stablecoins. And you also have an added risk of regulatory uncertainty, the adoption risk, and the stability mechanism risk. So how can we mitigate the risk in stablecoins? Similar with on how you mitigate the risk on a money market uh, vertical, it's also kind of straightforward. So I leave you with these three straightforward strategies that you can make. The first one is to diversify into various stablecoins. Second one is to always do your research about the stablecoin peg and how the mechanism works. And number three is to uh, probably take profit to fiat or even to BTC. And let's remember that you can't go broke by taking profits. And with that, I end my presentation on the different risks in DeFi, and I hope I was able to provide you value today. Thank you.
Yes, thank you so much, Steph. One takeaway for myself personally is I will go to my lending staking protocols like Nostra. I will check all the assets and make sure that I lend and borrow the same assets to mitigate the risk
Yes.
according to your suggestion. So this is a good one. Thank you so much. And it was a pleasure working with you during this time. So thanks a lot for participating and joining the team. It's a great pleasure to work with you.
Thank you, Dima.
Sure. And with this said, for today, we are closing the first 3x demo day. I would like to thank all the participants and all the judges who provided their feedback, who still are able to fill out the form and provide some extra value to the startups. And thank you so much, all the partners who helped to organize this, including Pitch Talk and all the partners who are supporting us. Thank you so much. If you would like to join 3x Capital, please go to 3xcapital.fund. You can either join our investment club, join our weekly meetings where we are doing research and sharing interesting deals, but also you can join education if you would like to switch to Web3 full-time. We still have early access discounts. Thank you so much, everybody, and have a great rest of the day. Cheers.